Have you ever watched in frustration as a stock suddenly explodes upward, knowing you were looking at it just days earlier but did nothing? That sinking feeling in your stomach when you realize you missed another opportunity that could have changed your financial future? You're not alone. This happens to thousands of traders every single day in markets around the world. Welcome back to our channel, where today we're diving deep into one of trading's most elusive skills, predicting explosive market trends before they happen, using the timeless wisdom of legendary trader Jesse Livermore. What you're about to discover might completely transform how you approach the markets. But before we begin, please hit the like button and let me know where in the world you're watching from today. It's always fascinating seeing who's joining us from around the world. And if you haven't already, make sure to hit that subscribe button and turn on the notification bell so you don't miss any of our future videos. Here's something most traders never truly grasp. The market doesn't announce its intentions with flashing lights or sirens. It moves silently, craftily, almost deliberately, trying to shake out the impatient while rewarding those who can read between the lines. Has this ever happened to you? You see a stock trading sideways for weeks, lose interest, sell your position, only to watch it skyrocket days later? The difference between consistently profitable traders and everyone else isn't luck or inside information. It's the ability to spot those subtle footprints the smart money leaves behind. Those little clues that whisper something big is coming while the rest of the market sleeps. This awareness, this heightened perception, is what separated Jesse Livermore from ordinary traders and allowed him to amass multiple fortunes when others were losing everything. The real, life-changing money in trading isn't made from random guesses or following the crowd. It comes from identifying those critical moments when market sentiment is about to dramatically shift, catching the beginning of major trends before they become obvious to everyone else. Think about it. Every massive market move that created millionaires started with subtle signals that most people completely missed. Stay with me until the end of this video, because I'm going to show you exactly how to recognize these early warning signs using Livermore's time-tested methods. You'll learn to see what others can't. The difference between a false move designed to shake you out and a genuine breakout that could lead to enormous profits. Imagine being able to spot tomorrow's biggest market movers today, positioning yourself at the very beginning of trends that others won't recognize until they're halfway over. This isn't about complex algorithms or having a Goldman Sachs terminal on your desk. It's about understanding market psychology and the telltale signs that reveals what's really happening beneath the surface. What I'm about to share isn't just about trading techniques, it's about a complete transformation in how you perceive market movements. If you want to master the art of spotting market trends before the crowd, hit subscribe now. I'm constantly sharing these timeless trading principles that transformed my own investing journey. Here's the hidden truth most trading courses never reveal. The market is constantly testing your resolve. It's almost as if it has a personality, designed specifically to shake out the weak-willed and reward the patient. Think about those times you've entered a position only to watch it immediately move against you, causing you to exit in frustration, and then witness the exact move you anticipated unfold without you. That's not coincidence. It's the market's natural rhythm. This journey of discovery changed everything for me when I realized the market communicates through deception. It whispers lies to force emotional decisions while simultaneously leaving breadcrumbs of truth for those disciplined enough to follow them. These subtle clues, the footprints in the sand, reveal where smart money is positioning before major price moves occur. Your mindset in these moments determines everything. While most traders react to what they see on the surface, the professionals are interpreting what's happening behind the scenes. They're reading between the lines of price action, seeing past the obvious to the revelations hidden in plain sight. Now I want to go even deeper into this topic by examining what happens before every significant market move. There's a pattern so consistent yet so overlooked that understanding it alone could revolutionize your trading results. Before any powerful breakout occurs, stocks almost always experience what Livermore identified as a period of rest and consolidation. These quiet phases where prices seem to do nothing, trading sideways within a range, are actually the most critical moments for your decision-making process. While the chart appears dormant on the surface, massive accumulation is happening underneath. This is precisely when amateur traders make their biggest mistake. They grow bored and impatient. The lack of excitement and movement causes them to lose interest, often selling their positions to the very professionals who understand the building pressure beneath the surface. It's during these seemingly uneventful periods that ownership transfers from weak hands to strong hands, from the impatient to the disciplined. The impact of recognizing these consolidation phases cannot be overstated. While others see boredom, the trained eye sees coiling energy, like a spring being compressed tighter and tighter, storing potential energy before an explosive release. This accumulation phase is where fortunes are positioned, not during the headline-grabbing moves that come later. What fascinates me most is how these patterns repeat across all time frames and all market conditions, revealing a fundamental truth about market psychology that transcends specific stocks or sectors. When you learn to identify these consolidation phases and the subtle clues they contain, you'll never look at charts the same way again. If you're connecting with these insights about market consolidation, write in the comments. I see what others miss, so I know you're tracking with me on this journey of market awareness. The real revelation that transformed my own trading journey came when I understood something that feels almost counterintuitive in our fast-paced world. Patience isn't just a virtue in trading, it's the ultimate edge. While everyone else is chasing the next hot tip or secret indicator, the masters of the market are cultivating something far more powerful, the discipline to wait. Think about this deeply for a moment. In what other arena of life would doing nothing often be more profitable than taking action? Yet in the markets, this paradox proves true time and again. I've witnessed countless traders with brilliant analytical skills ultimately fail because they couldn't master the psychological dimension of patience. They felt compelled to be constantly engaged in market action, as though their very identity as a trader depended on always having positions open. The mindset shift required here is profound. The disciplined trader knows that significant wealth isn't created through frequent trading, but through selective engagement when the odds are overwhelmingly in their favor. It's a complete inversion of how most approach the markets. Instead of asking, "What should I trade today?" the question becomes, "Is there anything today that meets my strict criteria for engagement?" Behind the scenes, this patience isn't passive, it's an active, deliberate state of watchfulness. When you're waiting for ideal setups rather than forcing trades, you're not doing nothing. You're preserving capital, conserving mental energy, and positioning yourself to strike with conviction when genuine opportunity presents itself. Now, even with patience as your foundation, you'll still face one of the market's most deceptive challenges: distinguishing between false breakouts and true breakouts. This discernment is where the journey from amateur to professional truly begins. The market has an almost uncanny ability to create false moves, specifically designed to trap eager traders. These deceptive signals will push slightly above resistance, just enough to trigger stop orders and attract buyers who believe they're catching the beginning of a move. Yet these false breakouts lack the power to sustain momentum, often reversing quickly and punishing those who took the bait. What's fascinating is how predictable this pattern becomes once you recognize it. The market's deception isn't random. It's systematic. It's as though the market deliberately tests commitment before genuine moves unfold. These false signals share common characteristics: hesitancy, near resistance, lack of volume confirmation, and an inability to maintain new price levels. The decisions you make in these critical moments, whether to believe a breakout is genuine or false, often determine your ultimate success. It's not just about technical analysis, but about reading the authentic story that price and volume tell together. When you develop this skill, you'll notice subtle differences that others miss completely. The quality of the move, the conviction behind it, the way it respects or disrespects key levels. If you've ever been caught in a false breakout and felt that frustration, drop "I've been trapped before" in the comments. We've all been there on this trading journey. So how do you recognize when a breakout is genuine? This is where the artistry of market analysis truly reveals itself. Real breakouts aren't subtle affairs. They announce themselves with unmistakable force that even relatively new traders can learn to recognize with proper guidance. The signature of an authentic breakout has a distinct character to it. When the real thing happens, you'll notice a sudden urgency that wasn't present during the consolidation phase. Orders rush in, creating a noticeable swell in volume that accompanies the price action. Instead of timidly approaching resistance levels, price moves through them decisively, without the hesitation or repeated tests that characterize false moves. What you're witnessing in these moments is the unveiling of intention, the moment when significant market players with substantial resources stop hiding their hand and make their presence known. It's as though a veil has been lifted, revealing the true direction that's been quietly building all along. This awakening of momentum doesn't just suggest strength, it confirms it with undeniable evidence that something fundamental has shifted in the supply-demand equation. This revelation completely transformed my own trading when I finally understood that I didn't need to predict breakouts. I needed to confirm them. The power of this approach lies in its authenticity. You're not guessing or hoping, you're responding to actual market behavior with clarity and conviction. But here's where the journey gets even more fascinating. Behind every major market move lies a sophisticated psychological operation that few retail traders ever recognize. The market systematically exploits crowd psychology through a pattern that repeats with remarkable consistency across all timeframes and instruments. Ready to see what others miss in the markets? Subscribe now and join thousands of traders who are learning to identify these powerful accumulation patterns that lead to explosive breakouts. Before genuine breakouts occur, the market often creates fake signals designed specifically to cause premature buying. When enough traders take the bait, the market reverses sharply, eliminating these weak hands and causing disappointment and frustration. This emotional cycle serves a crucial purpose in market mechanics. It clears the path for the actual move by removing participants who would otherwise sell too early. The hidden truth that changed everything for me was realizing this wasn't random. It was deliberate. Markets need to shake out the impatient before rewarding the patient. That's why the most powerful, sustained moves often begin precisely when most people have given up after being repeatedly disappointed. There's a profound wisdom in this mechanism, a natural selection process that ensures only the disciplined capture the most significant profits. This understanding brings a remarkable clarity to your decision-making process. Instead of being victimized by these shakeouts, you can recognize them as necessary precursors to genuine opportunity. It's like having a backstage pass to market operations, seeing the machinery behind the curtain while others react only to what happens on stage. If this perspective on market psychology has given you a new insight into why you might have been shaken out of good trades before, type "Now I understand the shakeout" in the comments below. Another dimension of market mastery emerges when you understand that a breakout's legitimacy is revealed not just by the breakout itself, but by what happens immediately afterward. This insight completely transformed my approach to confirmation and has saved me from countless false moves that would have otherwise resulted in losses. When you witness a stock breaking through resistance, the initial surge might look promising, but the true test comes in the days that follow. False moves have a distinct signature. They retreat back into the previous trading range relatively quickly, often within a matter of days. It's as though the price lacks conviction in its new direction and gravitates back to familiar territory, leaving disappointed traders in its wake. In contrast, genuine breakouts display a completely different character after the initial move. While they may indeed pull back slightly, nothing moves in a straight line. They find support at new, higher levels before continuing their advance. This behavior demonstrates sustainable strength, a willingness to defend the new territory that's been claimed. It's like watching the difference between an army that captures ground only to immediately abandon it, versus one that establishes a new, fortified position from which to continue its campaign. The revelation here lies in patience once again. Not just patience in waiting for the breakout, but patience in allowing the market to reveal its true intentions after the breakout occurs. This window of confirmation often provides the clarity needed to distinguish between fleeting movements and significant trend changes. This understanding created a fundamental shift in my trading journey. Instead of committing fully at the first sign of a breakout, I learned to allocate my resources in stages, putting on an initial position when the breakout occurred, then adding to it once the new level was defended. This approach aligned my strategy with market reality rather than wishful thinking. Now, even deeper behind the scenes of market mechanics lies one of the most powerful insights Livermore discovered: the visible footprints left by strong hands as they build positions. This concept revolutionizes how you perceive market movements, especially during what appears to be random price action to the untrained eye. Professional accumulation creates recognizable patterns that become obvious once you know what to look for. The most telling sign is how a stock behaves during pullbacks. When each dip stops at progressively higher levels than the previous one, it signals that strong buyers are actively supporting the stock, preventing it from falling below certain thresholds. This stair-stepping pattern of higher lows isn't random. It's direct evidence of powerful hands quietly building substantial positions. Think of it as watching invisible fingerprints appear on a glass surface. You can't see the person, but you can clearly see their impact. These footprints reveal intention, commitment, and most importantly, the presence of informed capital with the resources to influence price direction. When smart money wants to accumulate a significant position, they can't do it all at once without driving the price up against themselves. Instead, they buy on weakness, supporting the stock during dips while trying to maintain a reasonable average entry price. The mindset transformation occurs when you stop seeing pullbacks as threats and begin recognizing them as potential evidence of accumulation. This perspective shift completely reframes your relationship with market volatility. If you've ever noticed this stair-stepping pattern in stocks you've traded, write "I see the footprints now" in the comments. Let's explore how these rising support levels serve as one of the market's most reliable signals of building pressure. When you develop the vision to recognize this pattern, you'll start seeing it everywhere, hidden in plain sight yet invisible to most traders who focus only on breakouts and not on the foundation being built beneath them. Think about what it means when a stock repeatedly finds support at progressively higher levels during pullbacks. It's not just random price action, it's a direct window into the psychology and intention of serious market participants. These rising floors represent Buyers becoming increasingly aggressive, unwilling to wait for deeper discounts before stepping in. With each dip, they intervene earlier, creating a staircase pattern of ascending support that reveals their growing confidence and urgency. The revelation that changed my entire approach to market analysis was understanding that this pattern of rising floors isn't accidental or coincidental. It reflects deliberate, intentional accumulation by informed investors preparing for a significant move. It's the financial equivalent of watching pressure build in a sealed container. Each higher low represents another increment of pressure that eventually must find release through a powerful upward move. When I first discovered this hidden truth, it completely transformed my trading journey. Instead of focusing exclusively on resistance levels and breakouts, I began paying equal attention to how support levels were evolving. This shift in perspective allowed me to identify potential moves much earlier, often weeks before the crowd recognized the opportunity. The beauty of this approach lies in its simplicity and reliability. Anyone can learn to spot rising support levels with practice, yet most traders remain blind to their significance because they've never been taught to look for them. It's like having a secret map while others wander without direction. Now, let's take this understanding even deeper by examining another powerful clue that works in perfect harmony with rising support levels: the speed of rebounds after pullbacks. This subtle indicator reveals volumes about the conviction behind a move and the balance of power between buyers and sellers. In weak markets or stocks lacking strong backing, downward moves tend to be prolonged affairs. Prices drift lower gradually, finding little buying interest as they fall. The declines are slow but persistent, with each bounce lacking energy or follow-through. This behavior signals an absence of committed buyers willing to step in with conviction. The contrast couldn't be more striking when strong hands are in control of a stock. Under these conditions, dips become brief, almost fleeting episodes that are quickly reversed. The price barely has time to fall before aggressive buying emerges, pushing it right back up. This rapid recovery isn't just about the direction, it's about the speed and decisiveness with which the stock returns to its upward path. What you're witnessing in these quick rebounds is substantial buying. Power being deployed with clear intention. It's like watching a ball pushed underwater that wants to spring back to the surface. There's an unmistakable energy and inevitability to the movement. This behavior often precedes major upward moves because it demonstrates that control has shifted decisively from sellers to buyers. The impact of recognizing these patterns extends far beyond individual trades. It fundamentally alters your relationship with market volatility and your decision-making process during uncertain periods. If you've started noticing how the speed of rebounds reveals the true strength behind price movements, type "I can see the pressure building" in the comments below. Another critical dimension that deepens our understanding of market dynamics involves the relationship between volume and price action. While rising support levels alone provide valuable insights, they become particularly significant, almost undeniable in their implications, when accompanied by increasing volume during these periods of accumulation. This revelation transforms your analytical framework by providing confirmation that can't be easily dismissed. When you observe heavy buying during dips, especially as those dips find support at progressively higher levels, you're witnessing serious accumulation by investors who anticipate substantial gains. These aren't market participants looking for quick flips or minor profits. They're positioning for significant moves that justify their concentrated effort and capital deployment. The wisdom in this observation lies in understanding the story that volume tells when combined with price. Volume represents commitment, conviction, and the deployment of real resources. It's one thing for price to stabilize at higher levels during pullbacks, but when that stability comes with expanding volume, you're seeing the financial equivalent of foundations being reinforced before a structure rises higher. This combination, higher support levels, plus expanding volume, provides such powerful evidence of impending breakouts that it became the cornerstone of Livermore's legendary trading approach. The insight completely transformed my own journey when I realized I'd been focusing too narrowly on price patterns without giving proper weight to the volume signature that accompanies them. Behind every market move lies a fundamental truth about human psychology that few traders ever fully internalize. The crowd always arrives late to the party. This principle explains why the truly life-changing profits in any market go to a small minority, while the majority experience perpetual frustration despite having access to the same information. Most market participants only identify trends after they've become obvious and established, missing the most profitable early phase when prices are still reasonable and the risk-reward ratio is most favorable. The stark reality is that the difference between making a fortune or experiencing constant disappointment depends almost entirely on whether you position yourself before or after crowd recognition. By the time a stock appears in headlines, becomes the subject of analyst upgrades, or starts trending on financial social media, the smart money has already established their positions at much lower prices. They've been quietly accumulating while the stock was still overlooked or misunderstood. The awakening that changed everything in my own trading came when I stopped trying to chase momentum and instead focused on identifying stocks before they captured widespread attention. This insight represents a profound shift in trading philosophy, moving from a reactive approach based on confirmation to a proactive one based on early recognition of accumulation patterns. It's the difference between paying retail or wholesale prices for your positions. The latter requires more patience, discipline, and confidence in your analysis, but the rewards are exponentially greater. Revelation here isn't just about trading technique, but about adopting an entirely different perspective, seeing the market through the eyes of the smart money rather than being part of the crowd that provides their exit liquidity. If you're beginning to notice how often you've been on the wrong side of this equation, comment, "I'm breaking away from the crowd," below. Let me reveal another crucial aspect of Livermore's market mastery that transformed my own trading journey: the ability to recognize subtle signs of strength long before a breakout becomes obvious to everyone else. This awareness represents a profound shift in perception that separates elite traders from the masses. Stocks that are being accumulated for major moves display recognizable behavior patterns that signal their future direction. These telltale signs include refusing to decline during broader market weakness. When most stocks are falling, these special candidates either hold steady or decline minimally before quickly rebounding. It's as though they're operating under different rules, governed by a protective force that prevents them from following the crowd downward. Another revelation comes from watching how these stocks behave when news emerges. While most issues react dramatically to headlines, these special candidates show steady accumulation regardless of minimal news flow. They move with purpose rather than emotion, suggesting that informed participants know something that transcends day-to-day noise. Perhaps most revealing is their resilience during pullbacks. When selling pressure emerges, these stocks absorb it with remarkable ease, refusing to give up much ground before resuming their upward path. This behavior reflects the presence of strong hands underneath, ready to absorb any distribution from weaker holders. The mindset transformation occurs when you stop focusing exclusively on price breakouts and instead develop awareness of these subtle strength indicators. It's like learning to read between the lines of market action, perceiving the underlying narrative rather than just the obvious headlines. These signs allow perceptive traders to establish positions before dramatic price advances, positioning themselves alongside the smart money rather than chasing after them. Now here's the psychological dimension that few trading books address honestly. Taking positions before obvious confirmation often feels deeply uncomfortable. This discomfort represents one of the greatest hidden truths in trading psychology. The very feeling that makes most people avoid early entries is precisely why they're so profitable. While the crowd chases popular momentum stocks, making headline moves, you may find yourself sitting in quiet, seemingly inactive issues that nobody's talking about. You might question your analysis, wonder if you're missing something, or feel the urge to abandon your position for something more exciting. This emotional challenge, this inner struggle, is the price of admission for capturing the most significant profits. The revelation that changed everything for me was recognizing that this discomfort is actually a positive sign. It means you're establishing positions when valuations are favorable and before institutional demand drives prices substantially higher. You're buying wholesale while others will later buy retail. The journey isn't always comfortable, but the destination makes it worthwhile. Behind the scenes, this approach requires developing conviction that goes beyond the obvious. It means trusting your analysis of accumulation patterns, even when the market gives you little immediate gratification. It means having the courage to act on what you see, rather than waiting for external confirmation that inevitably comes too late. If you've experienced this uncomfortable feeling of taking positions in quiet stocks while others chase momentum, put "embracing the discomfort" in the comments. It's a sign you're on the right path toward trading maturity. As we've explored these timeless market principles that Jesse Livermore mastered decades ago, I hope you've begun to see the markets through new eyes. This vision, this ability to spot the footprints of smart money and recognize genuine accumulation patterns isn't just a trading technique. It's a complete transformation in how you perceive market movements. Remember, what feels uncomfortable often proves most profitable. While the crowd chases obvious breakouts, you now have the knowledge to position yourself earlier alongside the smart money rather than behind it. This awareness creates an entirely different trading experience, one of anticipation rather than reaction, of confidence rather than uncertainty. I create these videos because this knowledge changed my own trading journey profoundly, and I've seen it do the same for countless others. If you found value in these insights and want to continue developing this market vision together, hit the subscribe button. Each week we explore these subtle market truths that most traders never discover. If this approach to trading resonates with you, if you're ready to start seeing what others miss, drop "I'm seeing with new eyes now" in the comments. Your comment helps me understand which concepts connect most deeply with you. If you appreciated this perspective on spotting breakouts early, a simple like lets me know to create more content along these lines, diving deeper into the psychological and technical aspects of anticipating market moves before they happen. There's a video right here that builds perfectly on what we've discussed today, exploring how to manage your positions once you've identified these accumulation patterns. Click and continue with me over there as we take the next step in mastering these timeless market principles.